Yeah, our next topic is current issues. You see, auditing is a profession which we call a dynamic profession, or it's a subject that is dynamic. It changes as situation also change. So, issues that are currently coming out because of audit. Now, under this, we have current issues. That's ethical issues that are coming. Regulation of auditing, an ethical framework or a rule book. Now, we have ethics of the profession, and those ethical issues are captured in a rule book, which is a book called a rule book approach. This sets out the rules about what must and what must not be done. You must not do that. You must do that, or a framework approach. This sets out principles that should govern behavior with reasoned arguments to support the principles. You should understand why it is not acceptable to do that. You see, they say you should understand why it is not acceptable to do that. Why it is acceptable to do that. Both approaches may be enforced by sanctions against individuals who do not comply. So we are talking about regulating of auditing and ethical framework. So the ethical framework, one is a framework approach or rule book approach. The rule book is more, so I use the word stringent. Do this, don't do this. Do this like this, don't do this like this. But the framework approach is telling you that you must, there's a reason why you shouldn't do this. So you decide to do it or not to do it. So it gives you the impetus to maneuver. Now, there are a number of advantages of adopting a framework. So, what we normally adopt as auditors is a framework approach as opposed to a rule book approach. The rule book is too rigid. Do this, do it like this, don't do it, don't do it like this. So, it is like command, command, command. But that of the, what do you call it, framework approach give you why you shouldn't do something or why you should do something. So in a rule-based system, the rules may be interpreted too narrowly. That is the problem. An ethical framework is therefore more flexible, more what? Flexible. It may also be argued that accountants are professionals with an ethical code of conduct. Therefore, they should know why they should not do some things or why they should do some things. Auditor independence. Yes. SEC approved the following measures. The rules related to non-audit service were revised in some instances. Rules for the rotation of audit partners is a rule. And then establish rules that an accounting firm will not be considered to be what? Independent if certain members of management of the client had been members of the accounting firm. So meaning that we are talking about ethics. If you are a member of an auditing firm, you cannot be go and audit a company that you are also a member. These are what you are saying. A firm should not be considered to be independent from an audit client if an audit partner involved in the audit. So all the ethical issues we are discussing, they are framework. They are not rule. We have rule based and then framework based. The auditors should be required to report certain matters to the client's audit committee, including reports on any critical accounting policies that are being used by the client. All these are captured in the what? The framework. Now, the provision of non-audit services to audit clients. Nowadays, they say that we shouldn't what? Render what? Other services to our clients that we are what? Auditors for. So they are saying non-audit services that might impair the firm's what? Independence. There are some work when you do it, it means you are auditing yourself or you are reviewing your own work. So that is where Sabas Osley out of what 19 that is 1980 no 1980 2002 sorry 2002 yes. So Sabas Osley Act is lists nine non-audit services non-audit services that are considered to impair the firm's independence if they are provided by to an audit client by the firm. This set out below. Bookkeeping. They said don't do a bookkeeping for your clients and turn around and audit it. It means you are reviewing your own work. So some must also act. Then two, financial information system design and implementation. No, don't design financial system for your clients and turn around and come and audit it. That is management role. It is not your role. Three, appraisal or valuation services, fairness of opinions, and what? Contribution linked what? Reports. Then actuarial services, internal audit outsourcing services, management functions or human resources, broker or dealer investment advisor, or and then legal services, expert services. All these things are part of the rules that don't provide those services. Advantages of what? The accounting firm is in an excellent position to provide its clients with non-audit services. This is because it already has an extensive knowledge of its clients and, and clients' business and its systems. And it should therefore be able to provide the additional now. Yes, they have. They are in the better position to provide, but there are disadvantages. However, there are some obvious disadvantages to providing what? Now audit services. The disadvantages are that the accounting firm may be seen by the world at large to lack independence. Yes, people will see you as not independent because you are probably providing other services. Then, two, accountants from the accounting firm may find themselves in a position where they are making management decisions. Yes, when you put internal system in place for your client, you assist them and you turn around to come and audit it. No. Auditor rotation is one of the things. And they are saying that there are two different suggestions about how auditor rotation should be achieved. First one is audit partner rotation, that the head of the audit team, that is the audit partner, the one who is going to sign the audit, should be rotated every 4 or 3 or 5 years, depends on the policy. Then audit firm rotation. The firm itself, Deloitte and Touche, KPMG, they can be rotating themselves. SN, SNE, those kind of things. SN Young Boom, SN Young. Audit firm rotation. Alternatively, the accounting firm itself should remain as auditor of a client, meaning for company for no longer than a specified maximum number of years. So it depends on the policy of the organization. But what they are saying is that the partner should be rotated, and then the audit firm also should be rotated. There are several arguments in favor of the rotation of firms, providing independent audit including. Yes, one of them is in long-term audit relationship. In a long-term audit relationship, the auditors may become too close to management. The moment you are staying with them for a longer period, you become too close. Even if rotation will not protect the independence of the accounting firm, it improves the public perception of independence. Arguments against accounting firm rotation. So people are also arguing against it. Their argument is that there may be negative effect on audit quality. They say that once they are changing, sometimes quality of the work may be impaired. Then another one is there are also substantial costs from changing auditors regularly, costs. There is no evidence that compulsory audit firm rotation has a positive impact on auditor independence and audit quality. That's what they are also arguing. They are also saying that the market for auditing listed companies is dominated by the big four accountancy firm. Audit matters. Audit matters to be considered. Let's go. ISA 540, auditing accounting estimates and related disclosures. That is, the desire for a revised ISA 540 was driven by several factors. The previous standard was written prior to what? Several key changes in accounting standards. And then the audit inspections regularly raise concern about the what? Quality of the audit of accounting estimates. And then increasingly complex business environments and business processes. Key enhancements to the standard include the following: explicitly recognizes the spectrum of what? Inherent risks, introduces the concept of inherent risk factors, enhances risk assessment procedures, separate assessment of inherent risk and control risk for accounting estimates, emphasizes the importance of the auditor's decisions about controls, and introduces objectives-based audit work effort requirements. Sorry, enhances the stand back requirements, enhances disclosure requirements, a new requirement, new enhancement, and then with respect to external information. So what they are just saying is that there is what? A revised standard 540. Or is that also? Let's see. Yeah, 540. Yes, there is another one we call exposure drafts. ISA 315. It was also revised. Then identifying and assessing the risk of material misstatements. It was also revised. And the exposure draft is saying that the proposes more robust requirements and improvement guidance to what? Drive consistent and effective identification and assessment of risk of material misstatements, modernize ISA 315 to meet evolving business needs, yeah, improve the standards applicability to entities across a wide spectrum of what? Businesses and complexities, focus auditors on exercising professional skepticism throughout the risk identification and process and the assessment process. Significant changes provided include what? A separate assessment of control and what? Inherent risk will be required. Introductory paragraphs providing what? Summary of the flow of the auditor's risk assessment. Scalability considerations, for example, audit of entities that are smaller and less complex. An enhancement of the specific consideration relevant to the audit of specific audit of sector entities, providing examples of both of how automated tools and techniques are used. And then clarification, those are the enhancements. There are provisions to enhance the auditor's exercise of what? Professional skepticism, structure of the requirements, new concept of inherent risk factors, new definitions for significant risks, new concept of spectrum of inherent risk, and change in order of the. What they are just saying is that these ISAs have been revised, so you need to read a lot on them. There are so many of them. Now, other international auditing and assurance standard board projects. They say projects in the pipeline for 2019 include what? Exposure draft of a revised ISA 220 quality management for an audit of financial statements expected February 2019. Exposure draft of a revised international standard for quality control, and then an exposure draft of international standard for quality control too. So all these things They have been revised. Therefore, there's a professional skepticism. A number of papers relating to professional skepticism have been published in recent years. The ICES already contain many explicit references to professional skepticism, and the International Auditing and Assurance Standard Board's staff questions and answers professional skepticism in our audits of financial statements highlights aspects of the international standard of auditing that are particularly relevant. Ghana updates. That means the Companies Act, Ghana, they are talking about Ghana updates. The Companies Act of 1963 at 179 is over 50 years, and so what? Parliament is shortly expected to pass, which they did recently, 2019. So that's the update. They are saying Consolidated Bank, Ghana Limited. Consolidated Bank, Ghana Limited. On July, that is on 31st July 2018, the government revoked the licenses of what? About how many banks? 1, 2, 3, 4, 5. About 6 banks. No, 5 banks. Deposits of all 5 banks were transferred into a newly established indigenous bank, Consolidated Bank Ghana Limited, as Consolidated Bank. Okay? So that is the update. This creation of Consolidated Bank was part of what? Government efforts to address legacy problems. Legacy problems in the banking sector, and to restore the stability and resilience of what? The financial system. While some of the weaknesses in the sector were attributed to what? Microeconomic factors, a trend of poor corporate governance, poor risk management practices, related party. Yes, I want you to understand this because questions can be queued here. What caused most of the banks to be collapsed or to be, put together under Consolidated Bank? So some of the issues are, they say what? Some of the issues may be microeconomic factors. Then others are poor corporate governance, poor risk management practices, related party transactions that were not above board, then regulatory non-compliance, and poor supervision. All these things culminate into what? The liquidation of those banks and then bringing them together to form a Consolidated Bank of Ghana. The accountancy and auditing profession has also come out with what? Then the current structure of the auditing profession, because of increasing globalization of companies, the auditing profession now has 3 tiers. 3. So we have the big four international firms. That is Deloitte, Ernst & Young, KPMG, PricewaterhouseCoopers. See, so there are 4. Then the second tier, smaller firms, but still with numerous offices and international resources. Then the last one, the small firms. The Big Four came about from mergers and takeovers within their profession. They have resources, expertise, and geographical coverage to be able to audit the largest global entities. However, this level of amalgamation has left little choice for the largest clients and little competition for those large company auditing firms. So they are saying competitions and market authority reported that in UK, 97% of audits of 350 companies were undertaken by the what? Big Four auditors. So that is the Big Four were also accused of having conflicts of interest where lucrative consultancy work is carried out for audit clients. So please, you need to know all these things. In response, the CMA launched a detailed study of the audit sector in October 2018. The study covered 3 key areas: choice and switching, resilience, and incentives. So they came out with a results which you need to go by and be able to Now, incorporation and what? The problem of auditors' liability. They say a more recent development for giving financial protection to accountants has been a movement towards removing what? Unlimited liability status of what? Auditors. A number of approaches are available to achieve this. They include the following: accountancy practices may be permitted by law to trade as a limited liability companies. Accountancy practices may be permitted by law to trade as a limited liability partnerships. Status law may place a maximum number on the size of legal claims against the auditor. Someone smoking. The auditor may be able to agree with the audit client a maximum limit on legal claims. Transnational audits. Transnational audits. A transnational audit is an audit of what? Financial statements which are or may be relied upon outside the audited entity's home jurisdiction for the purpose of significant lending, investment, or regulatory decision. This will include audit of all financial statements of companies with listed companies or debt and other public interest companies which attract particular public attention due to their size, products also. So yes. The Transnational Audit Committee is a committee of IFAC. It represents and meets the needs of the forum of firms, which are firms that participate in transnational auditing. So for the big four, they are already there. They are identifying audit practice issues, providing a forum to discuss best practices in areas including quality control, auditing practices, independence, and training and development. Pros- Proposing members to the IFAC regulatory liaison group and then acting as formal conduit for interaction among transnational firms and international regulators. Small companies. An audit is an audit, whether it is a small or not, it's an audit. It's a phrase that may be used to what? Argue that the essential features of all audits are the same, regardless of the nature or size of the entity under audit. There is some truth in this. For example, all audits are regulated by access, and all audits result in an opinion from the auditor about whether the financial statement is true or fair or not. Audit exemption for small. Many countries do not require small companies to undergo a statutory annual audit. However, the definition of small company varies between countries. In UK, legislation currently exempts from audit all companies with annual return revenue not exceeding $6.5 million pounds rather. In the US, only companies listed with the SEC are required to have an annual audit. In Ghana, currently a requirement that all companies submit audited financial statements. Argument for audit exemption for smalls. What are the arguments? There are people arguing that they should be exempted. So these are some of the arguments. Audit costs are high. That means audit costs for small companies are very high. Providers of loan finance will normally attach their own specific condition to borrowings. There's one thing they are talking about. Filing deadlines for the account of smaller companies are often long after the reporting date. And then many countries allow smaller companies to establish abbreviated financial statements. The argument against audit exemption. So some people are also saying no, they should not exempt them. So you must learn all these areas because the question can be asked whether you agree that companies should be exempted from small companies should be exempted from audits. Then the first one is the financial statements have been prepared by a that's part qualified accountant. An audit provides some assurance that they provide a true and fair view and do not contain material misstatements. Because of this, Yes. The audit is valuable, especially to user groups. Three, shareholders, especially minority shareholders, should be entitled to receive financial statements from the entity that have been independently audited. Then the fourth one is the external audit imposes a level of discipline on companies in matters relating to accounting and internal control. The audit may identify areas where deficiency and cost savings can be made by the entity. So they are saying that they should audit. Others are saying no. If a small company expects to approach its bank in the future to ask for loan finance, the bank may demand to see audited financial statements. Yes, true. The tax authorities are more likely to accept audited financial statements as a valid basis for computing a company tax liability. If the small company expects to grow, it will become a large enough at some time in the future to require statutory annual audits. Arguments for and against. So audit of small entities, they are there, like acceptance of the audit appointment. All those things are there in a schedule. International Audit and Assurance Standard Board alerts. They are alerting us, we all the auditors, including the students, applying access proportionately with the size and complexity of an entity. So that's what they are giving, they are putting up there as an alert. The key points include the auditor's objectives are the same for the audit of entities of different sizes and complexities. That's what they're telling us. Often, small and medium enterprises engage in relatively simple business transactions. So the next one is the ICES help guide the auditor in their application to small and medium enterprise audits. The auditor shall comply with all ICES relevant to what? The audits. And then, even if an ISA is relevant, not all of its requirements may be relevant. The last one is audit documentation assists the auditor in an SNE audit. So they are saying the ICES recognize it is unrealistic to expect every aspect of an audit to be documented. Scalability. Scalability in the application of the ICES has become key area of debate for the International Audit and Assurance Standard Board in the evolution of what? The new auditing standards. A scalable ISA could be defined as one that is capable of being easily expanded or upgraded on demand. The ISA may need to be scaled down or up depending on both the size and complexity of the audit client. So that's what they're telling you. You use the standard based upon the size of the what. Then we also have the recent exposure draft of ISA 315, which removed the consideration specific to small entities section. Although most of the national material within these sections has been incorporated into the proposed standard. ISA 450, sorry, 540, auditing estimate and related disclosures, has also removed paragraphs specific to us. So all these are what? Impact of social and environmental matters on the statutory audits. So they say that consideration of laws and regulations in an audit of what? Financial statements. So when you are auditing financial statements, there are some other things you need to comply with. Non-compliance could be over a variety of social or environmental matters, such as what? Health and safety legislation, equal opportunity legislation, anti-pollution legislation. Social environmental matters can have what? A direct impact on the statutory audit. It's true. When you are auditing a financial statement, some health issues, some environmental issues can impact the financial statement. This is because a breach of social or environmental legislation may have a material impact on the financial statement. Yes, when you are charged Hmm? Yes. Other relevant ISIS. 315. Identify and assessing the risk of material misstatement through understanding the entity and its environment. The auditors respond to what? Assess risks. They have revised that also. Audit of accounting estimates. ISA 540 includes a requirement that the auditor should review the approach taken by the management to making estimates that relate to what? Environmental risks. So substantive procedures to detect a material misstatement due to environmental matters. So these are substantive tests. So as far as minutes of meetings are concerned, you use internal audit reports. As far as you can use due diligence reports for meetings, audit committees, meetings, and all those things. You can review documents. So industry information, media comments, environmental reports. Wait, why? Social and environmental reports and audits. Yes, significance of social and environmental reporting. Environmental policies. An entity's environmental policies might cover such matters as what? Energy consumption, pollution, use of natural resources and sustainability of the business, use of recycled materials. Social policies. Social policies might cover such areas as what? Employee rights, employee training and development, human rights, child labor in developing countries, equal opportunities, health and safety matters, relationship with the local community, supporting local, national, and international good causes. All these are environmental, social area. The environmental reports. An environmental report is seen as an important indicator of the commitment that the entity is giving to its impact on the physical environment and the future of the planet and its people. So, environmental report may cover such matters as environmental performance targets, relevant environmental regulation imposed on the entity, compliance with industry standards or other environmental what do you call it, standards, the entity's policy on sustainable development, etc., etc. Environmental audits. An environmental audit can be defined as a management tool comprising a systematic, objective assessment of how well an entity is performing with the aim of what? Safeguarding the environment by enhancing management control of environmental practices, including complying with appropriate legislation and regulations. Environmental audit may be performed by the entity's external auditors, the internal auditors, the external environmental experts, etc., etc. Areas that compliant with environmental regulations, for example, on pollution of land, water, and air, is part of the environmental audit we can do there. Waste disposal, recycling policies, sourcing of raw materials, etc., etc. Social reports and audits. A social audit assesses whether a company has achieved its set social targets and objectives. A social audit will provide independent verification that the company has met its target. Since a social audit is voluntary, the social audit report does not need to be published at all. However, companies may find it beneficial to publish the report to demonstrate their social responsibility and improve their corporate image. It's true. Audit evidence for social environmental reports. Now, the evidence may be what we called propose, propose a number of different KPIs for social environmental projects reports. Then provide suggestions that about how an auditor might obtain evidence to verify the reliability of the performance measurements in the report for each KPI. So they have given indicators here, key performance indicators. So they are saying percentage of employees who are women. You go to personnel file, you see it. If you want to know staff turnover ratio, you go to personnel files, you see it. If you want to know absentees level, then you go to payrolls, records of medical evidence, and so forth. Injuries at work, you go to health and safety records. Those are the measurements you use. Now, the last, we are going to the, let's see how much is there. Impact of technology on audits. Impact of technology on audit. Rapid development in modern technology play a fundamental role in the operations of both practitioners and their clients. Organizations are increasingly falling into one of two categories. Established organizations who need to modernize their products and business models, and new organizations whose business models and products are based on modern technology. Irrespective of which category organization fall into, technological development increasingly plays a what? Significant role in the future prospects of all organizations. Cyber security is another area. Cyber attacks on organizations such as distributed denial of what service, ransomware, and theft of confidential data, intellectual property, and design, so and so and so. Organizations must embrace cybersecurity as a key business risk and invest proportionately and robustly in assessing and responding to such risks. Because, yeah, not only can organizations suffer direct financial losses from cyber attacks, but can also suffer reputational damage, operational disruption, fines, and potential losses of licenses due to breach of data security regulations and so forth. Making cyber security within their firm. This includes establishing robust organizational systems and operations that allow staff to work flexibly and remotely. Then considering the cyber security risk at a client. Also, the practitioner might also offer other assurance services related to what? Cyber security and or systems design consultancy. The practitioner must also consider cyber risk management along with and organization supply chain within that security. Then data analysis, the analysis and the big data. What does it mean? Data analysis describe the use of what? Automated techniques to analyze a client data. The key aim is to help the practitioner achieve a more efficient engagement and add value to their clients. Examples of data analysis in practice might include data visualization, sampling, recalculating depreciation and so forth, assessing inventory, aging, applying external FX rates to foreign exchange calculation. Then blockchain, that's blockchain audits. Let's see what is a blockchain audit. First arose as the technology behind Bitcoin and has been evolved ever since. Blockchain technology allows parties who do not know each other to transact without using a trusted intermediary such as banks, thereby cutting transaction costs. That is blockchain. Drones. Drones. The use of drones in auditing is another recent technology development. So far, drones have been used in a very small number of audits for the audit of inventory. Yeah, that is where it is. Drones can be used to audit items stored over a large area outdoors, such as cars or timber. The drone can cover a much larger area in a shorter time than a human auditor, thus increasing the efficiency of the audit. So the areas they they can also be used to scan or film inventory being stored high up in the warehouses where which would otherwise be difficult for the auditor to access those. Impact of emerging technologies on audit. The key impact of technology on audit firms may not be change in audit principles or standards, but rather a change to the what requires skill sets of the individual audit team members. Thank you. Charlie, it's noisy.